Hello, Bruce Cox for the Retirement Toolbox with another $1 million idea on how to accelerate and accumulate wealth. Today we're going to talk about jump-starting a tax-free retirement plan and how to rescue an existing IRA, 401k, or 403b retirement plan from retirement plan tax traps that will crush your retirement savings. If you're like many small business owners, you've put off retirement planning, plowing profits back into the business, paying college tuitions, or just maintaining the lifestyle. You now wake up one day and realize you haven't set aside enough money for retirement. Well, this video is for you. You'll discover how it's not too late, how you can use these techniques, and it's possible to jumpstart a tax-free retirement plan beginning on your 60th birthday and generating $130,000 a year in tax-free income for the rest of your life, starting on your 71st birthday. And you'll also learn that if you started 5 years earlier, at age 56, you could generate $221,000 a year in tax-free income for the rest of your life. You'll also discover how to rescue an existing IRA, 401k, or 403b retirement plan from tax traps that'll crush your retirement savings. As we get into the presentation, I want you to consider some of the following key concepts. We're going to be discussing tax-free retirement plans, the magic and power of tax-free compounding. We'll also discover retirement plan tax traps, including Obama's death taxes, and you'll understand the use of other people's money to leverage your low-yielding assets like receivables and inventory to accelerate wealth building. You'll understand how the tax-free retirement plan doesn't lose money when the market goes down, that your money's safe and secure, and your income is steady and reliable. And you'll see how the leverage can accelerate wealth building by jump-starting your tax-free retirement plan, and how you'll benefit from simple interest versus compound interest. Can you guess why these politicians are smiling? They're smiling because you're paying for their earmarks, their patronage, and their bridges to nowhere. And you're doing it with retirement plan tax traps. The Bush tax cuts expire at the end of the year, and Obama's death taxes kick in. Between his death taxes and income taxes, he has a claim of about 75% of your retirement account balance when you die. That's right. When you die, President Obama is going to take about 75% of your retirement account. You die with a $2 million IRA, and taxes will consume $1,500,000, leaving your family with $500,000. And if your heirs forget to take an easy-to-forget deduction, then President Obama will grab another $220,000, leaving your heirs with about $300,000 after taxes to split. Is that what you had in mind? A lifetime of savings sacked and pillaged on your death? I didn't think so. You were told when you contributed to your IRA, 401k, or 403b retirement plan that you were saving taxes, when in fact you were only deferring the tax liability and compounding it. Now, when it's time to take withdrawals, the government's going to take about 40% of each withdrawal, leaving you with 60% after taxes. On top of that, Obama's death taxes will confiscate 50 to 55% of your planned balance when you die. So between income taxes and death taxes, the government's going to take 75% or more of your retirement account balance, wiping out a lifetime of savings. We can put a stop to this nonsense by switching to a tax-free retirement plan. Our new rescue plan has been designed to jumpstart a tax-free retirement plan. It's a patented process, so you know it's unique and well thought out, and it works. It effectively converts your IRA, 401k, or 403b retirement plan into a tax-free plan. The idea came about because many entrepreneurs and small business owners have put off retirement planning, plowing profits back into their business, paying for college tuitions, or just lifestyle issues. And they kind of wake up one day and realize they haven't put aside enough money for retirement. And they need to catch up and jumpstart the retirement plan. And with our tax-free retirement plan jumpstart program, it's not too late. Imagine you just turned 60, and 11 years later, at age 71, you retire with $130,000 a year in tax-free income for the rest of your life. Or you started 5 years earlier at age 56, and you retire with $221,000 a year in tax-free income for the rest of your life. Our rescue plan jumpstarts your tax-free retirement plan by using other people's money to leverage low-yielding assets like accounts receivable or inventory or current and future cash flows. And we do this without tying up your assets in any way. It's not factoring. It doesn't interrupt your day-to-day operations and cash flow of your business. And it works like this. Our funding source lends your business $1 million for 10, 15, or 20 years. Simple interest, interest-only payments. And that money is invested in a tax-free retirement plan. A plan that is owned by you, your spouse, or your children. And you'll benefit from the magic and power of tax-free compounding. And it's also flexible to allow estate planning so that you can work with your advisors to avoid the Obama death taxes. And we effectively convert your IRA, 401k, or 403b plan into a tax-free plan this way. You take a taxable withdrawal from your IRA or 401k or 403b and use that money to pay the interest on the loan. The interest deduction, which flows through in an LLC or Subchapter S corporation to your personal tax return, offsets the withdrawal income. So it's a wash. Zero taxes are paid, and you've effectively converted a portion of your IRA into a tax-free retirement. Tax-free retirement plan will earn reasonable rates of return. At 6%, your money doubles in 12 years. 7.2%, it'll double in 10 years. At 8%, your money will double in 9 years, etc. The plan should be able to earn 6, 7, 8, 9% tax-free. And you'll benefit from tax-free compounding. You don't lose money when the market goes down. You have tax-free access to your money. There's no early withdrawal benefit. There's a tax-free death benefit. When you invest in an IRA, 401k, stock, or a mutual fund, three things can happen. Your investment can go up, it can go down, or it can stay the same. Back in 2008, during the financial market meltdown, the S&P and NASDAQ were down 40%. And many people saw their IRAs, 401ks, and mutual funds cut in half. I'd say that's a pretty risky retirement. Well, during that time, none of our clients lost money due to market losses in their tax-free retirement plan. You don't lose money when the market goes down and you share in the upside, and you earn a reasonable rate of return. The tax-free retirement plan eliminates the downside risk. We can illustrate it with this chart. Let's say you invest $1 million in the tax-free plan or into a mutual fund. Market goes up 10%. You've locked in $1,100,000 in your tax-free plan. That's the new floor. Next year, the market drops 40%. You lose $440,000 in your mutual fund. You don't lose money in your tax-free plan. The $1,100,000 is locked in. Market recovers 8% the next year. You share in the upside. Your tax-free plan is worth $1,188,000. Market drops again the next year. You still locked in at $1,188,000. Now, when the market dropped 40% and you lost $440,000 in your mutual fund, you now have to earn 67% on your money just to get even. Now, historically, that's taken between 8 and 16 years. So basically, in a mutual fund, IRA, 401k, you may lose a decade or two of growth. It could get wiped out in 90 days like it was in 2008. Whereas in a tax-free plan, you don't lose money when the market goes down, and you share in the upside, and any gains are locked in. And in this example, at the end of 5 years, your tax-free plan was worth $1,330,000. The mutual fund was worth $750,000, down 25% from the original investment. The difference in the two is $580,000 in 5 years. A risky investment versus a non-risky investment. So it's a no-brainer to switch your money into a tax-free retirement plan where you share in market upside and none of the downside. To summarize, we use other people's money to leverage low-yielding assets like receivables and inventory to jumpstart your tax-free retirement plan. And we effectively convert your IRA, 401k, or 403b plan into a tax-free retirement plan by offsetting taxable withdrawals with interest deductions. You benefit from tax-free growth. You earn reasonable rates of return. There's no downside risk from market losses. There's no required minimum distributions. And there's a tax-free death benefit that completes the retirement plan in the event of an untimely. There are two systems of taxation in this country, one for the informed and one for the uninformed, according to the Honorable Learned Hand U.S. Appellate Judge. We've just informed you of a method of jump-starting your tax-free retirement plan and converting your IRA, 401k, or 403b into a tax-free plan. It's your choice to take advantage of this opportunity. Give me a call at 800-955-7898 to explore your situation and to see if it makes sense for you to switch to the tax-free plan. Thank you for listening, and I look forward to hearing from you. Thank you. On a compliance note, the illustrations you have just seen are hypotheticals based on historical performance. They're not guaranteed. Future results will vary, and the variance could be quite substantial. And the illustrations do not include full disclosure. Again, thank you for listening. I look forward to hearing from you. You can reach me at 800-955-7898. Thank you.